All right. So as I'm going through this, the first thing that stands out is it's not really talking about funding like most people think in lending. It's not apply here, get this amount. It's more about how your business actually looks before you ever try to get approved. And that's where a lot of people mess up. They rush straight into applications without realizing banks are literally reading signals off your profile first. Like right here, it's breaking down how everything tied to your LLC matters, not just one piece, your structure, your bank activity, even your online presence. And most people only focus on one thing, usually credit, and ignore everything else. But what this is showing is that approvals come from everything lining up together, not just having a decent score. Now, as I scroll a little more, you can see it starts getting into what your business actually needs to look like on paper and online. This is where documentation and consistency come in. If your address doesn't match across records, or you're using a personal phone instead of a real business line, or you don't even have a proper website set up, those are small things, but they stack up and make your business look incomplete. And banks pick up on that instantly. And this part right here about industry type is something people completely overlook. Your NAICS code basically tells lenders how risky you are before they even look deeper. So two businesses could look the same on the surface, but one gets better approvals just because it's categorized differently. That's why structure matters so much. You're controlling how you're perceived from the start. Now, getting into the banking side, this is probably the biggest thing people misunderstand. It's not about having a bunch of trade lines or trying to look flashy. It's about consistent, normal activity like real deposits, steady patterns, nothing that looks forced. Banks want to see stability. If your account looks random or manipulated, that's a red flag no matter what your credit looks like. And then this section on the 90-day window is key. A lot of people don't realize banks are basically watching how your business behaves in those early months. So if everything is clean, consistent, and structured during that time, your internal profile builds up way stronger. That's what leads to better approvals later. Not just timing, but how you use that time. Scrolling a bit more, now it's tying everything together with relationships. Every bank you open an account with is building a file on your business. So it's not just about opening accounts randomly, it's about building history with institutions that actually matter. That's what unlocks higher limits and better opportunities down the line. And then once everything is aligned, that's when funding starts to make sense. Not before. That's the part people get backwards. They try to get results first instead of building the foundation that produces those results. At the end of the day, this whole guide is really showing that this isn't about shortcuts or quick wins. It's about building something that actually looks real, consistent, and trustworthy from every angle. That's what leads to approvals, funding, and long term leverage. If you want the full breakdowns, templates, and the updated methods we're actually using, tap into the Patreon. Link is in the bio. There's a 7-day free trial so you can go through everything yourself. And if you've got questions or want help figuring out your situation, join the Discord. Link is also in the bio. We can guide you through it or even handle the process with you if needed. That's where everything really gets put into action.